In this video, I'm going to be breaking down this live gold trading breakdown that resulted in just over $3,000 with the full recording of the execution. Now, all I did for this trade was use my EBP strategy. It's a strategy that if you guys have been here on my YouTube channel, you're very familiar with, as it's one of my prime setups. Now, for those of you that are new, let's go ahead and let's define what exactly is an EBP. Now, EBP just stands for a engulfing bar. So we have the bullish engulfing and we have the bearish engulfing. So let's define our terms. A bullish engulfing is essentially a candle that sweeps the prior bar's low, and we have a close above the prior candle's opening price. This is what makes this a bullish engulfing. Now, inversely, for a bearish engulfing, all that we're looking for is the price to sweep, again, the prior bar's high, and then we close below the prior candle's opening price. Now, for some people, engulfing bars, they require to close, let's just say, below the low. For me, I just needed to close below the prior candle's opening price for this bearish example and above the prior candle's opening price for the bullish side. Now, pretty straightforward. Now, let's go ahead. I'm going to head over into TradingView, and we're going to break this exact trade down, and then we're going to go into the dashboard to show the funded account for proof. And then I will play the live execution of me actually entering the market, placing my stops, putting my TPs, and see how the full trade played out. Here's a chart of gold futures. This is typically what I'm watching for in order to execute on my trades when it comes to the gold market, right? Whether you're trading with the CFD contracts on Forex, I personally use the gold futures contract. This is GC if you're looking for it on TradingView. Now, as I always do, I always start with market context. What is the market currently doing? Before any type of system or any type of strategy that you trade, you need to identify the market context. Now, gold obviously has been running up from Monday, Tuesday, Wednesday, Thursday, and now this right here is Friday. So for the Datex indicator right here, this is like Thursday, but this is the Thursday session. Wednesday is here, but this is the one-day session. This is Tuesday, but this is the Tuesday session. And yeah, just don't want people to be confused that this price action right here is Thursday. Now, nonetheless, we understand that the market has been pushing up pretty much since the start of the week, right? We had a little bit drop down from Sunday going into Monday. The market rallied. And we know this. Typically, when we have one-sided type of price action, right, where the market is heading higher, and we also hit new all-time highs on gold, we understand towards the tail end of the week, there's going to be something called TGIF, which is one of my favorite plays, where typically on Friday or Thursday, right? Let me go ahead and actually put this right here. So typically going into Thursday and Friday, Thursday/Friday, we're going to anticipate some sort of reversal end of week. And think about essentially think about a higher time frame candle. When we have a higher time frame candle, right? Let's assume it's a weekly candle, and we have like a wick high and we have a wick low. Typically this wick is going to form on a bullish week during Thursday or Friday when we have some sort of reversal from the mean. Now, this does not mean that the market is going to tank or anything like that, but we can anticipate a very small move from some sort of premium level to discount. Now, let's go ahead with the context in mind. Let's look for the intraday play. Now, as I always do, I always start on the 4-hour time frame when I'm starting my trading day. I have the daily and the weekly, but then I use the 4-hour to kind of see, okay, where is the market likely to be headed? Where are my premium levels? Where are my discount? Now, the first thing, let's do this. I'm going to adjust the indicator right here so that we can go ahead and show the 4-hour time frame. Just that way we can have the 4-hour engulfing bar being plotted. Perfect. Now, what do we first see? We see that the market from prior day highs in here, going into Thursday's highs, this was actually swept going into the new day. So going into Friday, the market sweeps the prior day's high. And not only that, but we also sweep Asia range high as well. So we have two things that the market is doing in this example, right? Two liquidity pools being swept. So number one, we're taking out the PDH, which is prior day highs. And number two, we're taking out the Asia range high. So let's go ahead. And now that we have this plotted, this is the thing. We know now that the market is in some sort of premium level. And the thing is this, the market is going to go from premium down to a discount, and then vice versa. But for this example, we're just going to focus on this premium down to a discount. Now, where is the next discount level that the market is likely to head it to once we have this closure? If you looked at this overall imbalance point, you are absolutely correct. Now I'm going to remove the days of the week just so it could be a little bit more clear. So again, we're taking out prior day highs. We also took out Asia range high, and then we have this engulfing bar that forms. Now the beautiful thing about this is that this low did not hit this fair value gap yet. So we still have an area where we can anticipate the market go from a premium, which the market already created some sort of high, down into a discount that has not been traded to. If you guys have been in my Telegram, if you guys have been in the Discord, within mentorship, you know that I always talk about this. I want to see a level that's not been traded to in order for me to look for entries. Now that we have this framework in mind, let's go down to the lower time frames to see how I was able to enter on this. So here we have the 15-minute time frame, and I just wanted to put it around the 4-hour because this is typically how I have my charts. Now I have multiple screens when I trade, but I just want to see what the 4-hour doing. And all I'm trying to do is this. We know that now that the engulfing bar formed, and let me actually put the indicator on here as well for the 4-hour time frame, just so we can have a very clear distinction of what we're trying to do. What I'm looking to do is I'm looking on the next candle for the market to push up into some sort of reference point, or ideally around the 50%. This is typically kind of like what I'm looking for. So again, here on the 15-minute, that's essentially what I'm watching for. Now, you guys are going to see in this, I actually missed this trade. So here, let me go down to the 5-minute time frame. I actually missed this move right here, right? So this is the engulfing bar closure around 10, and then 10:05, we rally up into this fair value gap. Now, for me personally, I missed this drop in here, but this is where you guys are going to see the execution on the trade during the live example. Now, this is how the market looked. Now, using the replay feature, let's see how this ultimately played out. We essentially have the market rally into this imbalance point, and then we have a breakdown lower. And again, I personally missed this move. However, we still had this 4-hour fair value gap that was not traded into. And then what do we have here on the 5-minute? You guys are going to see my exact entry. I was just looking for the market to rally higher into this imbalance. Now, I also love the fact that we swept liquidity, had a move lower, and now we have this fair value gap, and we also inverted this bearish fair value gap, which is indicating bearish flow, meaning that the market is no longer showing us bullish price action, and we're just heading to the potential downside objective. Now, this is why I entered. So this was the reasoning for the trade. Now, where did I place my stop? And you guys are going to see I placed my stop just above this candle's high, the one that broke the low. Now we have this fair value gap, and this is also pretty much right above the fair value gap as well, because typically you don't want to see price rally up when you have these conditions where you have an inverted fair value gap and then you have a bearish fair value gap. Now, the key thing for the entry is I wanted to see the rally first before the market hit this low. And as you guys are going to see, as we play this forward, the market comes up in here. You're going to see me take that sell position. Easy trade. Again, the market at this point in here, a lot of people would have got freaked out, and because there was one more retrace back into the range, and then boom, price comes down, takes out the low, hits this fair value gap, and I was out of the trade. And now you guys are going to see why I don't like to take trades anymore once the market hits this level, because look what happens in an overall bullish example. If we're just playing a minor retracement, you have to be mindful, because this can actually set the stage for the market to head higher. And it was Friday, so I'm not trying to like take too much of a move. So yeah, guys, now let's go ahead. I'm going to show you guys the trade first on the dashboard, and then we're going to go ahead and show you the live trade example. So here's my dashboard, and the reason why I want to do this, number one, because for some reason, like the funded accounts, they all say demo on the top right. So I know people are going to see that, and if you're not familiar with funding pips, or honestly, and I say a lot of these prop firms, they typically are just going to show demo on things. So phase, this is the master account, so this is the funded, and yeah, pretty much this was the trade right here. You guys are going to see 1884. Now, I did take another trade with Alpha Capital, which is another prop firm I use. I have multiple different prop firm accounts with different prop firms. Now, if you want to check out Funding Pips or Alpha Capital, I will have links in the description below as well. But you guys are going to see 1884, the sell. You guys, again, you're going to see the full trade. This was the first trade on this funded account specifically. And yeah, now I did take it again with Alpha Capital. So the total on the trade and that one I made about $1,300. So we were just about $3,100 on just 2 funded accounts. Now I'm going to make a separate video entirely on my process of funding. So make sure to subscribe if you haven't. Now let's go ahead and I'm going to walk you guys through the live trade execution on gold. Alright guys, so I'm going to go ahead and play the recording. At this point I pretty much just entered the trade. So I want to go ahead and show you guys pretty much the full trade breakdown. I'm going to do a little bit of a walkthrough as well to kind of talk about the psychology that comes with trading. Now, as you guys see the P&L fluctuation, I was up $1,400 at one point, and obviously I have my game plan. I put my stop loss, as I said, above this prior candle's high, which is above the fair value gap, and I'm looking for the lower low before I look to take any profit. Now, as you guys see, as the P&L fluctuates, and obviously this is at like 8x speed, you'll see how it's up like pretty much about like $1,800 right at this point. Now, I could have taken it off, or maybe I could tell myself like, you know what, I should just get out the trade. And especially at this point, most traders get nervous because they look at the P&L and they see that they were up 1,800 bucks. They may have went back to break even, and this just affects a lot of trader psychology. But again, I know I have my game plan. I know unless the low makes a new low or I get something that's opposing to my overall bias, I know I'm going to stick to the trade plan. And again, most people, you will go being up essentially like, $1,800 to starting to be down money. A lot of people would get a little bit scared, maybe exit the position. But again, all we're doing is retesting this overall fair value gap. So again, I was just being calm, cool, collected. I know I have my trade plan. I accepted the risk prior to that, which was very important. And you guys are going to see in a few seconds here that the market ultimately comes back lower and actually starts to head down to make new lows. So we're going to play this forward. Again, being up 1,800 to down 500 would affect a lot of people, but being 7 years, I'm pretty much numb at this point when it comes to this. Now we have a nice sell-off in here, right? As you guys see at this point in time, let me just rewind it back. Price makes a new low, up $2,000 right at this moment, and you guys are gonna start to see me start to scale out and take off positions. So right there, right? Price makes a new low, and this is when I start to scale out positions. Boom, right there, and then out of the full trade. So let's just rewind that a little bit backwards. Right, took out the one position. I put my stop loss to break even, but I'm like, you know what? When I looked at the futures chart, it was actually like near the fair value gap. So it was a Friday. Boom, took it off there, and that's all she wrote. Missed out a little bit more money, could have squeezed out a little bit more. But typically when we're at lows, I'm just a little bit more cautious when it comes to taking profit. And it's Friday, wanted to enjoy the money that was made and took profit on my other account as well. So hope you guys enjoyed this video. Like and subscribe if you want more. And let me know if you guys like this type of style of live trades with explaining the breakdowns in the beginning and then showing the live executions afterwards.